Good. All right. Stephanie and Chris, thanks for in the middle of your busy schedules joining us today. We'll let a few of these folks roll in here. Chris, how many webinars are you doing a week these days, by the way?
Try to keep it to 3 or less.
3 or less. Good for you. Good. Well, we'll give folks folks a few more seconds to hop on this morning. It's like we've got a number of familiar names on there. A couple of folks that were on our first session too. Feel free, Chris and Steph, to hop on the attendees and have a look. Good. Okay, well, welcome everybody to another Thursday afternoon building science webinar. This is part 2 of a 2-part series. So if you missed number 1, you'll have to go to the website and get the first part. But today we have like the deep carbon experts with us. So hopefully everybody has saved all of their really hard questions for Chris and Stephanie today, right? That's what we're here for. So yes, we're going to be talking today again in this part 2 about going beyond this net zero energy thing and how as a home building industry do we move into a low carbon future. Like we talked about in part 1, even the tiered energy code wasn't about carbon. Only now are we starting to see some discussion at the codes level about carbon reduction. And yet the question is, codes may not even be able to keep up with the urgency behind having this done. So let's jump right in. We're going to have the agenda for today is I'm going to do a little bit of a review of our session 1, and then Chris is going to take the floor and take us on a deep dive and maybe help us understand some of the work that remains to be done. And just remember that when you attend these building science webinars is industry stakeholders and friends and colleagues and participants, sometimes you have to go away with some things you need to do because Chris and Stephanie can't do everything. So that's part of the, it's free, but there's responsibility with it. And then Stephanie is going to talk about the broader building industry and the E and the ESG. And so we'll get to that. So Chris, many of you know Chris. There it is. Chris, I don't know if you want to say a few words for yourself before we jump into the polls here, or?
Nope, other than I'm super glad to be here and, glad that this topic is kind of really starting to find its way into the discussion and get some traction. And I think, yeah, it's exciting and less intimidating and easier to wrap your head around than you might think. So hopefully that's what people take away from this today.
And you're getting dragged, and I should say that sort of carefully, you're getting dragged stateside these days to help them with some of their things, right? Some of the.
Yep, that's right. After sort of like, working on this in the Canadian context, I'm with the Rocky Mountain Institute in the US now, kind of doing very similar work, but for home builders in the US too.
Isn't that cool? Very good. Stephanie, you're keeping busy these days, not just with Doug Terry, but a lot of other things.
Yeah, I do have quite a few things on the go, but certainly taking on some really cool projects with Doug Terry Homes and really moving forward on the whole sustainability side, which is some of the things that I'm going to be touching on today, and wrapping up my master's degree starting in January and on sustainability, and have a lot of opportunities to speak with a number of different groups and working on some really cool projects, from Tiny Hope to trying to get more people into the trades and a lot of other things, but those are some core ones right now.
Yeah, good. So folks, before we get started, housekeeping number one, if you have questions, technical in nature for Stephanie and Chris, please put them in the Q&A. Don't put them in the chat. Over in the chat is a really good spot to, if you're having technical difficulties with Zoom, Stacy and the team can help you out over there. But any of your questions, let's keep them over there. Yeah, some comments already, Chris, in there. Someone on here, Graham, mentioned that they enjoyed your lecture in San Diego last month. So there you go. So again, as good Canadians, be considerate, be thoughtful, be respectful. Don't hesitate to ask the difficult questions, but ask them in a respectful way. Our admin staff's behind you to help if you're having technical issues. There is a survey that's going to go out immediately after, along with some other information. Please fill it out and get it back to us. It's very helpful in setting the stage for future webinars. In fact, at this point in time, we're just starting to put together the 2023 webinar series, Critical Canadian Building Science for Homes. And it's looking pretty good, but it's only coming into place because of feedback we've had from you folks. Links, presentations, and everything else will be sent to you later on. There's actually going to be a copy of the presentations given, as well as a recording that you can share with your staff. So get the word out there, get it abroad. And again, you can actually go into all of our previous building science webinars for the last 2 years on our website under resources and listen, use them in classrooms. We have individuals that are putting them up in front of their teams and their classrooms, to have a little 1 hour building science discussion about everything from solar heat gain to, the embodied carbon in a solar panel or whatever it is. So, and closed captioning also is available as well. So it's myself, polls, real quick. Let's find out if you folks actually know how to use Zoom. So Stacy's going to roll a poll and find out where you folks are actually located today. Got some British Columbians, definitely some Ontarians, some Atlantic provinces, Alberta. Very cool. And yeah, so it looks like mostly Atlantic provinces, British Columbia, a few from Alberta and Ontario today. Excellent. Next question we're going to have for you is, what do you do day to day? And if we don't have a category that fits you, just put it over in the chat. We love to know who you are. We love to know what you do. Let me see, what do we got in the chat here? Housing manager. Very good. Oh, we have gardeners calling from Belize. There you go. Very nice. Municipal climate policy, Alexandra. Corey, designer, house, small buildings, mechanicals, plumbing, interior designer. Oh, that's awesome, folks. Good deal. So Chris and Stephanie, we've got a wide section of folks today. So little recap of last week, we had Peter Moonat from the Canadian Wood Council joined us, and he gave us a nice deep dive on wood, biogenic products. What is considered to be true carbon sequestration, and again, how important it is. And I love the main slide that he presented is why wood. If you were going to create a material that was like the perfect material, could it get any better than wood or fiber? That was actually pretty cool. And then of course the project down on the right is a building that was had the tall wood application, was done very affordably, and beautiful looking building, and had a really fairly nice decrease in total, not just energy, but carbon, and again, met some of those higher steps of the British Columbia step code. We also had a presentation from Enbridge Sustain. So Enbridge Sustain is a unregulated business, not part of Enbridge as we know it. And again, that presentation with Derek Hickson talked about the future and Enbridge Sustain as a unregulated business, and the fact that they're now bringing to the home building industry this ability to have things like geothermal hybrid heating, dual fuel hybrid heating systems, solar panels, some really cool offerings. And again, this is an area that has been very difficult difficult. As things scale up for net zero energy and low carbon, we can do it on one house, but when we start to talk about community scale, we need experts that can work at scale with the builders. And then the last one is we had Sean Mason. Again, Sean's been as a well-known builder in the province, working along with, Enbridge Sustain, but also doing net zero ready for a number of years now. Originally was one of the first builders to build to Energy Star standards back in 2007, and now is building affordable net zero housing with PV in the Barrie area and doing it really, really well. And of course, he shared with us a bunch of lessons learned, right? Like really practical things, boots on the ground. And again, you can go and watch that webinar. Sean wrapped things up for us last week in a terrific way. So, without further ado, Chris, I'd like to welcome you on, and feel free to share your screen, and it's all yours, sir. Awesome. I think you might be on mute still too.
You are correct. That I am. It's hard to do two things at once, share your screen and take yourself off mute. That's above my pay grade.
That's all right.
Yeah. So yeah, thanks for the invitation. And I'm here to bring an embodied carbon lens to this deep dive discussion. And I feel like there's lots we can talk about. And I think what I'm going to try to do in this presentation is kind of introduce some of the topics and give a little bit of context, but then sort of leave space in the Q&A time to really dive into them.
Okay.
So I will kind of move quickly through this. I think most people sort of know this part, that it's over the last quarter century or so, we have really realized that operating buildings not only uses energy, like Andy was saying off the top, but that energy often drives a lot of emissions. And so everybody on the call and at Building Knowledge and across the industry has been doing a great job in addressing that and really reducing it. It's I was looking at some US stats the other day, and I'm sure they're quite similar in Canada, but the proportion of emissions that are actually coming from new homes is it's really minuscule. I was shocked at how small it is, and we've all collectively done a great job in driving that down, and we can see the path to where it will really be zero or close to zero in the upcoming decade or so. But what hasn't sort of been paid attention to as much until quite recently is that the making of our buildings also causes lots of emissions, and that's what's kind of been termed embodied carbon, although but it's all the emissions that happen from purchasing raw materials to make our buildings, getting those to factories, producing products in the factories, getting those products to a site, and then on site assembling that. And there's emissions associated with that whole arc of a product's life to getting into a building. Mm-hmm. And it used to be, even just 10 years ago, when people looked at, well, how big a deal is the material piece, here? We would often see charts like this, where there's an amount, maybe 400 kilograms of emissions per square meter on the material emission side. But because our buildings weren't particularly efficient and we were using mainly fossil fuels, it didn't take long for operating emissions to kind of dwarf that. So 20, 30 years out, the operating emissions were a much bigger piece of the overall carbon footprint of the building. That picture changes dramatically when you start getting towards, even where our code minimums are today. The picture looks a lot more like this, but certainly when you get to net zero buildings, the picture looks more like this, that the embodied carbon emissions from our materials can be 95% of the full life cycles emissions from a building. And that spread over 30 years looks quite dramatic and sort of makes it clear that we have to address those. But if you zoom into what that means over the next, God, I used to say decade before 2030, but it's a lot less than a decade. when we
That's it.
really have to start getting emissions down, whether you're building, inefficiently or you're building to net zero. These emissions coming from our materials are really the bulk of the emissions that are going to happen by 2030 and even by 2050. And so hence the adding this to the lens. And I often am, but I don't like to be misinterpreted as saying, well, we can forget about operating emissions now, we have to concentrate on this. It's a both and
That's right.
scenario. Yeah.
Yeah. And Chris, I think you corrected me on that one time. You were a little worried. You're like, Andy, you can't just toss operations out the door. It's got to be a both.
Yeah. And I think, for a long time, we have been talking about this target of zero, and whether you're talking operational, which is what it's mostly associated with, or even on the embodied side, zero is a great target. But my friend Bruce King says, when you've made a mess like we have with the climate, you don't just stop making a mess, you kind of have to clean up the mess. That's part of what we need to do. And getting to zero is us stopping making the mess, but it's not cleaning it up. And so, the materials in our building give us this really unique opportunity, and we'll explore this today, of like actually reducing emissions in the atmosphere by using carbon storing materials in the building. You actually go from like, well, I'm not making the mess anymore, to I'm starting to clean it up. I'm actually putting CO2 that's in the atmosphere, into my building and locking it up there for a good and important amount of time. So people who've seen webinars with me at BK before have seen some of the results from these studies that we've done for Enercan and Toronto and Nelson, and we actually just finished one up for the city of Vancouver. And so those were attempts to figure out, where are we today? Like what is the actual carbon footprint of the materials for our homes today? And the answers are anywhere from shockingly a lot, like this high result in Toronto where it's over 0.5 ton of emissions per square meter of floor area for a house. Up at the top end, we're seeing a pretty interesting common ground around the average in these studies, especially between Toronto and Vancouver. We are really surprised, like they're almost identical, which is surprising given that the codes, the energy codes are different, the styles of building are different. A lot of the materials were surprisingly different, but the end result was almost the same in terms of the average in those studies. And then we also saw some buildings in those studies as built, without people even attempting to make a lower carbon building, that were quite a bit lower. And I think, to me, that's exciting, because when we think about operating emissions at this point, we're starting to shave small percentages off, and maybe seeing some diminishing returns there. But here are these studies of builders who, without even trying to make a lower carbon house, in Vancouver, the best result was 30% less than the average, and in Nelson it was 50% less than the average, and in Toronto it was 40% less than the average. So that means that those kinds of reductions are doable, immediately and today, because these are production builders doing their standard, business as usual practice, and by the material choices they're making, not because they were trying to choose lower carbon materials, but just for whatever other reasons they chose their materials, ended up with a lower carbon sort of palette of materials, and made this kind of difference in the carbon footprint. And you would be hard pressed to make an easy and cost neutral jump down of 50% in your operating emissions now, but that's the low hanging fruit that's here for us in the embodied emissions space.
So Chris, I just have a question on that. If you can go back a slide just to clarify so that I'm clear.
Yeah.
Those numbers, when you say total net emissions, so kilograms of carbon per meter square, so that's not volume, but like floor space. And net emissions, are you still just looking at the material carbon, or does that have some of the operational in there as well?
This is strictly materials.
Okay.
And so, as you point out, it's like we calculate all the emissions for the house, but then we divide it by the number of square meters of conditioned floor area. It's probably good to, so, you know, if you're building, say, a 3-car garage, that's going to put that number higher because we're counting the emissions from those materials, but we're applying them against the square meters of conditioned floor area.
Okay. Good.
And so the way that we have been doing those studies, we were involved in the creation of 2 tools, which are in a lot of ways the same tool in that they operate from the same methodology and the same database of emissions profiles of materials. So there's BEAM, which is Builders for Climate Action's version, and there's MCE squared, which is the Enercan version. They're very similar. It's a spreadsheet tool. You sort of define some of the properties of your building by area and by things like R value and things like that. And the tools are kind of doing a set of calculations that take the emissions from a whole range of materials. I think these tools are up over the 500 unique products in the database now, and sort of like present you, once you give it the dimensions, present you with an amount of emissions per material, and then obviously you can add that up per assembly or for the whole building and start to see what that looks like.
Chris, I have to tell you, just sort of interesting. I remember when you introduced us to MCE and to BEAM, you know, maybe 2 years ago, and now builders are using this. We are fielding calls and requests. Please help us use this and put it together. So, you know, I do have to sort of say a big thank you to you as well, too. So your work on both of those things, because it's made it very easy for residential builders now to jump into this space and do some sort of baseline or benchmarking.
Yeah, I'm always glad when people reach out to us and say that they were easy to use, because I got to say, like, I built the first versions of the tool for myself to use. It wasn't going to be a tool for everybody, and I am not a computer guy, and I'm not a tool type person. So, you know, my plan in setting out to sort of develop these was like, if I can figure this out, anybody can figure it out. And so it's always good to hear that, you know, people are finding them to be like approachable and useful. So one of the things that it's sort of important to say around those results that I showed you and about the tools is that these tools are not accounting for everything in the building. And so, Andy, when you sort of said like, what, you know, have this webinar be about, well, what are we missing? You know, we already know what we're missing. The tool now accounts for all of the kind of main structure, enclosure, and partition materials. So, you know, from you know, concrete in the foundation to what's on top of the building as roofing, and kind of all the things that that make up the main building enclosure. Those are all included, but we have not included things like mechanical, electrical, and plumbing, HVAC materials, appliances, finishes, millwork, and anything that kind of happens out in the yard, driveways, porches, you know, all of that kind of stuff. And there's been a couple reasons for doing that. One is the main mass of the building is represented in the materials we have. Like, this is the stuff that we use lots of quantity of, and you know, the volumes are really high. But it's also been the place where the data set is the best. You know, we can represent pretty much every product that you would think of using in those parts in the structure, enclosure, and partitions, and multiple options for each. Not, you know, not every company has done an EPD, so we don't have everything. But, you know, if you're doing asphalt shingle roofing, we've got probably half a dozen, you know, versions of asphalt shingle roofing. And so you can, you know, those materials are really well represented. On this other side, not so much. There aren't any EPDs for appliances at all. Very little for mechanical, electrical, and plumbing, and all of these other pieces. So, but that is starting to come along. And I thought what I would share with you today I actually spent the week kind of exploring, what's changed in the EPD world, or the data world. And so, I was able to do some approximations for things like ductwork, for wiring. Interestingly, fixtures like toilet sinks and tubs, suddenly there's tons of EPDs for those now. So, those are quite easy to count. Things like countertop, there's a whole bunch of EPDs in that field now too. So I kind of took a 200 square meter house and grabbed some average figures from these new pieces of data. And, you can see like all the ductwork in a house. I sort of found an average of, there's usually about 110 linear feet of ductwork for 1,000 square feet of house. So multiplying that out, that actually only totals 90 kilograms of emissions for a 200 square meter house. Wiring was a lot bigger, almost 1,800 kilograms of emissions. Toilet sinks and tubs, another 1,200. Countertop only 250. So, if you kind of take some general numbers and add that up for a house of that size, it's about 3,400 kilograms of emissions. But that only, turns out to be 17 kilograms of emissions per square meter. So if you think about even the average houses being in the sort of like 190 to 200 mark, it's big, but it's not that big. And
that's right.
It's also, these are things that, in the structural materials side, the enclosures and the partitions, when you make certain choices, you can make differences of tons of emissions. I feel like this side, it's good to know, and I'm looking forward to sort of being able to say, here are some averages for a house, and we can tack that on to our totals. But nobody's going to put less wiring in their house because they know, what the emissions are. Nobody's not going to have a toilet or a tub because they're concerned about the emissions. So I feel like as these numbers develop, they're really great things to know, but they're much less actionable in terms of, this isn't the area where we're going to drive down emissions. First of all, they don't seem to be adding up to very much, and we're not probably going to do very much about them. So, this was I'm really glad that you kind of like put that topic out, because it pushed me to do this little exploration, and I'll definitely dive into it deeper, but it sort of confirms our initial suspicions that this actually isn't as big a piece as everybody was thinking.
Right, that is interesting.
Yeah. Now the one thing you'll notice isn't here is like furnaces or heat pumps.
Right.
But again, really the main thing there is the metals, and there's a bunch of metal in them. But if you compare that volume of material to what we're using to build a whole house, I think we'll find the same thing, that it's a moderate impact, but it's not
Right.
on the scale of what the actual materials that we're currently counting are.
And then we might see, with the advent of the heat pump technologies, we have this refrigerant side, but that is, am I safe to say, and am I correct to say that we're seeing an evolution there already from the regulation side, where they're having to move to lower GWP? We've got CO2 based air source hot water tanks now, right?
Yeah, and that's exciting, because some of those refrigerants are 2,000 times more potent a greenhouse gas than CO2, and so in the making of those refrigerants, in any leaks or releases that happen, the impacts are massive. I did a calc for our house, because the person who installed our heat pump here actually didn't tighten something down, and all the refrigerant leaked. And when I did the calculations, I was like, for the amount of refrigerant that went into the atmosphere, I could have heated this house for 4 years on natural gas, and that was the same emissions as what leaked out of my heat pump. So it's important, but like you said, we've got the Kigali Agreement in place. The U.S. just ratified it after a decade of dragging its heels.
Oh wow! Okay.
And so that means I think we'll see manufacturers moving pretty quickly with better refrigerants, because now the U.S. market is going to want them. Or is going to have them, and so that that always pushes action there.
Good. We do have some questions. I just want to say to folks,
Yeah.
we're going to wait till the end after Stephanie's done, and then we'll take some Q&A. So
yeah.
Good.
So I think the other issue that I'm going to dive into is about time, because I feel like that's something that we're not thinking about or capturing necessarily very well in all of this work right now. And so, there's, when you do a life cycle assessment of a building product, there's a whole bunch of life cycle stages, from getting the raw materials from wherever they are in the earth to what happens to these things at the end of their life. And, a good life cycle assessment sort of counts up all the emissions that happen along that life cycle. And the tool that we made and all the reports we're doing, they're just focused on these first 3 phases, basically making the product. People call this a cradle to gate assessment. And so, there has been concern about, well, like, you're leaving out all this other stuff, and isn't that other stuff important? So I think, it's important to think about time and amount of emissions. And so, one of the main reasons for focusing on that product phase is almost all of the emissions that happen with any building product happen at that phase. And it, it depends on what the product is and how it's made, but I've never seen it less than 65%, and it's as high as 85% of all the emissions that will happen over the lifespan of that product happen when it's being made. And so, to me, there's that puts a lot of value on that. The other thing about product,
if we shouldn't have a multiplier for upfront embodied carbon versus, operational or something else, right? Like,
oh, you just predicted my slide deck.
Oh no, sorry.
No, that's great. I think you're exactly right. So, just by volume, these ones are big. The other great thing about this set of emissions is these are pretty easy to calculate. Like, manufacturers know how much fuel they're using, know how much electricity they're using, they know how far things are moving, and the sort of the way that this phase gets accounted for, it's pretty thorough and it's pretty easy to verify. And it's also something that the manufacturers can work on. I've never seen a 2nd generation or 3rd generation EPD be worse than the first one. Like, once a manufacturer sees these numbers, they start working to drive them down. And so I compare this to fuel mileage in a car. It's like, what do people want to know when they buy a car? They want to know the fuel mileage. And this is kind of that number. It's a big and important number that we can measure in a certain way. The things that happen, along the rest of the life cycle phase, this next bit, so actually transporting materials to the site and building with them on site is a surprisingly small percentage of the emissions. It's, ranges, again, it depends on the material and where you are, but as a total of the emissions, it's usually around 5 or 10%. And we also can't really calculate this well. Tools try to give approximations. Like, if you say, oh, your site's in Peterborough, Ontario, and I'm using, this kind of insulation, and the closest factory is here, and it's likely to get from here to here by this kind of truck, they'll give you a roundish number, which, when I've explored it, have almost always been wrong, and sometimes wrong by an order of magnitude wrong. And so, I kind of compare these emissions to, like, if you're thinking of the car analogy, product is fuel mileage. This is like, how often do I need to change the oil and the brakes and the windshield wipers? It's like, yes, you'll have to do that. It's actually not that big a deal. Everybody's going to do it on a slightly different cycle, but it's not a driving factor. And so I feel like, that's how I characterize that. And then the next kind of phase is this use phase. So maintenance and repair, and sometimes if something needs replacing before the building it's in is at the end of its life. Those start to be very hard to calculate, because you're trying to assume what people will do in the future at some point in the future. And you're unlikely to start even accumulating those emissions for the next at least 10, but for most of the building materials we're counting, like 20, 25, 30, 40 years out. And then, end of life, similarly, we're into the zone where we're making lots of assumptions, and the data just keeps getting fuzzier out in the future. And not that I think these things aren't important to think about, but I don't like when people try to have one number that summarizes all of this, because
That's right.
if you've got a
Yeah.
material that has 50 tons of emissions up front and 10 at the end of its life, it's not really right to say, well, it has 60 tons of emissions, because the 50 are going to be in the atmosphere from today until the end of the building's life, and the 10 aren't going to go into the atmosphere until the end of the building's life. And so that's where I think your modifier comes in. And here's the slide for the multiplier. So this little curve, this is, we tend to think about emissions like you have a number today and that's just the number. But what happens with emissions in the atmosphere is they drive warming, and the longer they're in the atmosphere, the more heat they accumulate in the atmosphere. And the curve for CO2 looks like this. So, if I emit a ton today, you can see by 100 years, its impact is more than the impact of a ton, because it's like it's been in the atmosphere 2 years, so now it's warmed twice as much. It's been in the atmosphere 3 years, it's warmed 3 times as much. It's not like exactly linear like that, but that's what that curve looks like. And so when you talk about a multiplier, if we're talking about, oh, I need to replace this material at 30 years, its impact is smaller because it's only going to start going up this curve at the 30-year mark. But meanwhile, really, if we think about climate damage, what we want to think about is it's the area under that blue line. So the emissions we make today grow in impact over time. And that's why this embodied carbon piece is so important, because we put this huge amount of emissions up front when we make a building, and they stay in the atmosphere. And, the 40 tons we put in for an average house today is having, 100-ton impact in 100 years. And so, trying to prioritize what we can do today, really, when people talk about the time value of emissions, this is what they mean. They follow this curve. And so, I think we need to start thinking about that. Also, when we're doing that comparison, everybody likes to make the charts. I've made them of like, here's our embodied carbon and here's our operational adding up. And at X years, those things become equal. But if you put them on this curve, they don't become equal for even longer, because each year's operational emissions, like they start and sort of like arc upwards in this same way. But again, if we're looking at the area below the line, it's not a direct comparison. 100 years of accumulated operating emissions over 100 years isn't the same as 100 tons of emissions today. So
that's right.
So anyway, I will skip a bunch of this.
Okay.
Because
that's good.
The last topic is just the notion of stored carbon, and I know that Peter touched on this last time. And again, I think we're sort of, the building world and the LCA world have like not really talked to the climate science world very much. And so, what a climate scientist would tell you about putting carbon away in a place like a building is that, the yellow on this graph is a ton of CO2 emitted today. So it's a pulse, and sort of like in the other graph, it's like it continues to drive warming as it decays over time. The climate impact is the area, the area of the yellow up here. If we put a ton of carbon away in a building, if it's away for the same area as the yellow, then it's offset that ton of emissions. And so it turns out that happens around 46 years. So, any biogenic carbon that you put away in a building for 46 years has completely offset that same ton of emissions. And
I see. Okay.
And when it comes out, it's now a new emission. So again, we do this weird math in LCA where we say, well, it's going to draw down a ton today, but it's going to let that ton go in 100 years. So we'll just call it zero. But it's like, well, no, the longer it stays in the building, the more work it does. So if it stayed in the building for 80 years, it's actually done the work of offsetting 2 tons of emissions, the 1 ton we put away. And so this is also part of that time factor that I think we really need to think about. And
Right.
I might just leave it there. I had more slides, but I feel like I don't want to eat up all the time, and so I will stop there and look forward to Steph's presentation and then some questions.
Very good. Well, thank you so much, Chris. No, that was phenomenal. That was, and we're gonna have some questions. And this, we might have to do a 3-part series, Chris, but that'll be in 2023. Hey, Steph, how are you?
Doing great. So I'll go
Good.
ahead and share my screen.
That sounds good.
Okay, so I'm taking what I'm doing is I'm now going to draw us back out and to the 30,000 foot level. And let me just try
Okay.
to, there we go. Okay, and so what I'm going to be talking about is ESG in the residential industry. So carbon will be integrated into this conversation, but where it's basically setting context for kind of where the industry is going, where carbon fits in within this broader conversation of ESG. So I'll just touch on a really brief history of sustainability and ESG to make sure that everybody knows what I'm talking about, and then some trends that are coming specific to greenhouse gas emissions and that sort of thing, and what's happening in the home building industry. I'm looking at the US market particularly, and I'll talk about that and a little bit about some of the large builders internationally, and then how you can help. So just for context purposes, when I'm talking about the word sustainable and sustainable development, I'm referring to the people, planet, profit. So the 3 pillars of sustainability. That's when you've taken all of the things on earth and culled them down to the lowest common denominators. We have the environment, we have people, and we have the economy. And so when I'm talking about sustainability, I'm talking about that balance between those 3. When I'm talking about sustainable development, it is the kind of the pathway to become sustainable. So living within our natural resource means so that we're not over consuming, therefore future generations don't have resources to work with. And when I'm talking about ESG, or environment, social, and governance, this really came about in around 2006. And it's basically the finance industry and business has overlaid their principles onto sustainability. And so when we're talking about ESG, we're talking about environment, we're talking about people or social issues. And then on the governance side, it sort of wraps up the economic piece, but also with the way in which we govern our businesses, the way in which we focus on risk management, and particularly climate risk management. So I'll get into that in just a minute. I was at a conference in, actually Gord suggested the conference and I went in California, and one of the speakers said, if you take all the world problems and you sum them up into an acronym, it's ESG. And I was like, that's it was quite funny. Everybody laughed, but at the same time, it's very true. And so the type of problems, that ESG is trying to solve are things like environmental issues like climate change, catastrophic loss. On the social side, food insecurities, like, have you tried to buy, Andy, romaine lettuce in the last few weeks?
Oh, yeah, someone just $10, what, 10 or 12 bucks for a.
You can find it, right? So exactly. So, the impacts of food insecurity because of climate related events. And then on the economic side, what have we been living with? Just the economic turmoil with inflation rates and interest rates that have, really been challenging for, particularly for our industry. So I just want to focus on, there's sustainability, and the definition of sustainable development came about in 1987. The UN had summoned a commission to report, and that's where that was defined. But fast forward to 2015, the Paris Agreement was signed. The 17 Sustainable Development Goals were developed at that point in time. And so an interesting thing, last week, I think it was last week, the COP 27 was held in Egypt. And this is a very monumental thing happened. So carbon emissions that is creating climate change and natural disasters are largely driven by the more wealthy nations because we have more cars, we have more resources in which to create more emissions. But the places that get the damage and that are hit the hardest are actually poorer countries, often kind of in that middle, the equatorial or the global south, we call it. And so what has been set up just this past week is a fund that the wealthier countries are investing in for damage and loss to be given to the poorer countries. And this has not been done before. So this was actually a very monumental thing. So, you know, it's quite an interesting thing what's happening. So the critical thing, and really to what Chris was talking about with regards to, you know, climate change and warming, the Paris Agreement was we had 196 countries saying we don't want to exceed 2 degrees Celsius, but actually preferably we don't want to exceed 1.5 degrees Celsius. We are right now at 1.1 degrees Celsius over pre-industrial levels. So just to put into perspective, the types of climate related impacts we've already have with 1.1, we are for sure going to hit 1.5. But we're trying not to exceed that. But in order to do that, we have to cut our emissions in half in the next 7 years. Wow. And so it is a monumental undertaking. Like I think of, you know, just the things that I own in my own lifestyle, and trying to think about, you know, what can I do to cut my emissions in half? It's very significant, and it is a absolutely monumental task. So why is this important? Well, we had Florida, the Hurricane Ian that went through Florida that had massive devastation. And if that picture doesn't make you cringe, this $1 million McLaren sitting on top of a toilet.
Now we're worried. Now we're worried.
Now we're worried. Hey, but guess what? Do you think the insurance companies are paying attention? Right?
No kidding.
We had a derecho. I'd never even heard of a derecho, but we had this. It killed 11 people, primarily by trees falling down. And this was in Ontario and in Quebec just this past spring. Yeah. BC last year, wildfires, then floods in the same year. Now this year, drought with massive loss of salmon. So who gets hurt in all of this? It's our local communities. It's where the storm hits that gets hurt, right? And it's the people that live in these communities that have to pay more insurance, that have to clean up after, if they even have insurance, or that they've lost their homes, right? And so now what we're seeing is a shift in dialogue, and now we're broadening the conversation. And I'm seeing this at municipal level, like at government level, at business level. And now we're looking at mitigation, which is, to Chris's point, what can we do to stop the problem? I love that analogy he had about, you know, stop making the mess. That's the mitigation. But then we are now talking about, we have to face the fact that we are going to experience impacts from climate change. What can we do to adapt? And so that's where it's, we're looking at things like, what can we do? Like, say, as a land developer, are we building in 50-year floodplains? We need to relook at those sorts of things. Like, we need to relook at how are we constructing our homes so that they are watertight. You know, we need then that the roofs stay on. So it's adaptation, and what the municipalities are doing now. And I'll get to that in just a minute, but basically what the municipalities are doing now are they're looking at their infrastructure to adapt and setting up plans around that. So I'll go through a handful of ESG trends that I've been seeing out there in the world. So 130 countries have agreed to achieve net zero emissions by 2050. And so in this case, for North America, we've got the United States has made that commitment, and so has Canada, but then Canada has now layered on the carbon tax. So we're presently at $50 per ton now as of April 2022, but by 2030, it's going up to $170 a ton. So the carbon tax that you see on your bill, whether it's a utility bill or whether it's like at the pump, that is going to be triple in the next 7 years. Because of the carbon tax and because of the regulation that is being put in by the government. So therefore, this is where the work that Chris is doing so incredibly well is very important, and it's on the carbon accounting. And so Chris talked about this already, so I won't go into too much detail on it, other than to say, what I'm doing, like with my work with Doug Terry Homes, and what is going to become regulated over time, I think, is where the businesses have to do their own carbon accounting. So that's in that middle 5 to 10% section that Chris was talking about. As a builder, we have a fleet and we have buildings with furnaces. I'll give an example, like gas furnaces or something like that. Those emissions that are generated from our business, doing business, essentially, within the confines of our business, that's scope 1 and 2. And there will eventually become regulation coming down for companies to do that.
Right.
And then,
Stephanie, one thing I just want to ask you to make sure I have this right, because I've heard this said, and I just want to make sure it's right. So I'll ask you, the expert. I've often heard that one of the reasons why it's good for us to ask for things like EPDs or to start to communicate with our suppliers, manufacturers, trade partners is that in their role, their scope 2 may contribute to our scope 3 or vice versa. The little bit we each do, it starts to sort of overlap a little bit, and it's almost synergistic. So is that true?
so
Notionally?
sort of. So the way, so I'll explain it to you like this. So you know, when you're accounting, if you took accounting, there's like that kind of the double accounting where you've got. Do you know what I'm talking about? Where you've got the one that goes to the positive, the other to the negative, and they're the same number at the bottom. That's essentially how it's happening with carbon. So if it's my scope 2 and it's somebody else's scope 3, that allows for there not to be double counting of the carbon emissions.
Okay.
Yeah. So
Gotcha.
that's how that works. Because otherwise, if I'm saying it's scope 2, you're saying it's scope 2, we're doubling it, and so that allows for a sort of double accounting. And so on
double
that,
dipping, we can't even do that with our our incentive programs, right? So yeah.
no, exactly. Well, and we don't want to, because really, what carbon accounting, what it really pounds home is accuracy, completeness, because we're talking about in the environment here, in our lives, in our future. And so we want to know that the numbers that we're using are accurate as much as we possibly can. So anyways, carbon accounting is one thing that's coming up. And what we're finding is a number of companies are setting these zero emission targets. And so the only way, actually, you say this a lot, what gets measured gets managed. And so, And so how do we know if we're hitting our targets if we have not measured it in the first place? And so that's why carbon accounting is going to increasingly, for all the scopes, regardless of them being like a 5 to 10% or not, is going to become an increasingly important thing for businesses to become familiar with. So there's an increasing number of businesses that are setting net zero emission targets. So you see this trajectory here of businesses that have tripled over the course of a couple of years. Similarly, Fortune 500 companies. And so we're seeing an escalation on the carbon accounting side. The second trend is ESG disclosures. And so this is affectionately called the alphabet soup. There's a lot of different disclosure organizations that have popped up over the years that companies would report to voluntarily what their GHG emissions are, what their social initiatives are, like in different things, what their governance issues are. So each one of these kind of have their own unique, but yet cross over with one another. So they each have their own unique purpose, but they also cross over. So what's happening right now, which is quite fascinating to watch, is all of these groups are beginning to consolidate and collaborate and come together, because what we need is a universal language to be able to report on these things.
You know, it's interesting, Stephanie. I was listening to a program called Marketplace recently, and it was emotionally said that it reminds people of the early days of the financial markets when there was all sorts of accounting. And then finally, we all landed, internationally, they decided let's base it on the SWIFT system. So, every transaction now is founded or tracked on the SWIFT. And you almost look at this and go, wow, that's sort of where this is headed.
That's exactly it. And so like, what an exciting time to be alive, because we're just seeing things happen in real time and very quickly and very aggressively, because we're working towards this 2030 target, right? So that's exactly what's happening. And so one that's really rising to the top is this one at the bottom here, the International Financial Reporting Standards. So that's an international body that oversees financial reporting standards, accounting standards board. They have now developed the Sustainable Standards Board, which now SASB is falling under. Under here, they're working with TCFD, they're working with GRI and CDP, so they're all beginning to kind of consolidate together. So I do think we will, it's following exactly that same trajectory. So I already talked about this, so I'll continue on. But this is just, I like this screen because it's fun and colorful, and it shows a handful of companies that are well down the path. And if you're looking for, hey, I want to look at, to see what other companies are doing, just Google them, Google ESG sustainability reports, and look at what they're doing. The third trend is ESG growth and accountability. And so we're seeing a rapid increase in investment dollars. And so in ESG investments. And so, but in the next couple of years, it's anticipated that one in every 3 asset under management dollars, so 1 in every 3 invested dollars will be in ESG investments. So these are portfolios that have a focus on the E or the S, as an example. But what's fascinating is that just this past May, both the United States and Canada, the exchange commissions, so the Securities Exchange in the US, and then the Canadian Securities Exchange, and also OSFI up here in Canada, have put out, in the States it's regulation, in Canada it's guidelines on anti-greenwashing. And so now, like, because we're seeing this huge amount of investment in these ESG, there's been no mechanism in which, like, companies can say, oh yeah, I'm green, but they have no requirement to prove it. So now what this is doing is requiring them to prove it. So what that means is the businesses that are in these portfolios are going to have to prove carbon emissions. So they're going to have to do their scope 1 and 2 emissions. And then the big one is they're also going to have to identify what the climate risks are for their businesses and the strategies in which they are addressing those. So they have to be very proactive in their planning. So this is happening both in Canada and the United States with an implementation of the end of this year. At least that's where it has been. So the finance industry is actually the one that's really driving the bus on ESG. ESG, the terminology, came out of the finance industry, and they are the ones that are really pushing for this, because what's happening is ESG in the finance industry, they're able to get a peek behind the curtain of how the business is operating, particularly how they address risk. And investors are risk averse, and so it's providing them with this information. So right now, even though publicly traded companies are the ones that are going to need to do this mandatory, it's actually investors can very well demand that from the private companies as well. If they say, well, if you want my investment dollars, give me this information. So so I don't think we're necessarily off the hook. So from a local level and a municipal level, all 649 Canadian jurisdictions across Canada signed the emergency declaration, the climate emergency declaration. And so basically the entire population of Canada, all of its governing bodies have signed this climate emergency declaration. And so some are now taking are moving ahead. And so with, I use Whitby here in this example, I've got Ottawa as well. They're beginning to get projected analysis on their risk in their area based on climate impacts. And so these numbers show it for Whitby and also for Ottawa, it's the same, that extreme precipitation, so the amount of rain and the number of days of rain, are projected to go up exponentially. Similarly, extreme heat, so the number of days and the amount of heat on those days, or the temperature on those days, are going up exponentially. And then also potential for violent storms. And so we know that from the derecho. So what this is doing now, municipalities are actually now developing adaptation plans. They're developing the climate change master plans, the green development standards. These are all outcomes from what is happening. And so in the case of Whitby, I was going over their adaptation plan, and because of the extreme rain that they were talking about that they would get, it's a large volume of rain at a very short period of time. Their sewer systems are not sized to be able to handle that volume. So there's bigger flood risk, and people in homes will get flooded because the sewers and the storm sewers just cannot evacuate the water fast enough. So some of their adaptation plans are now built on that. Other ones from the heat, they're very worried about people dying in their homes, essentially on those really extended heat waves. And so looking at putting in air source heat pumps to allow for cooling in buildings for their citizens. I won't get into this one, but the fifth trend is health, wellness, and affordability, and that's a whole other webinar series. So the US home builders, I was looking at the top 10, and these are all publicly traded. And so the smallest one here is a $3 billion builder, built over 10,000 homes, and the largest is $28 billion, built 82,000 homes last year. So these are big builders in the States. And so if we watch where they're going, they're publicly traded, so all their information is online. If we watch where they're going, that is a guide for where others will follow. When I started looking at them in 2020, there were not this many ESG reports. So we've seen an escalation in actual ESG reporting. And this graph shows you this. There's one, KB Homes, that has been doing it every year. The continual line means it's every year. The dotted line means they kind of dabbled in it. But you'll see here now that almost all of the top 10 have there are actually ESG reporting now, or in the case of D.R. Horton, which is the largest builder, whose financial reporting is very traditional business. It's all about shareholder profitability and profit margins. Like, they have nothing on their social media that I saw when I looked at this that even talked about things they did in the community to help the community out. Like, there was no E or S in any of their reporting.
And these are all, I'm assuming, sorry, Stephanie, I'm assuming these are all publicly traded, are they, or some of them private? All publicly?
No, these ones are all publicly traded, the top 10. And so now, even this big one, D.R. Horton, now has a sustainability statement on their website saying that they're looking into it. And so that is an indicator that, and as I mentioned, finance industry is driving this, and investors are driving ESG, because it's the ESG companies, the companies that are truly paying attention to the ESG in their businesses, are outperforming financially traditional businesses. So where the money goes, people follow. And so the things that they're already doing, 4 of the builders are already carbon accounting. So they're actually doing scope 1 and 2, and some scope 3. They're doing energy labeling. They're paying attention to diversity, equity, and inclusion, health and safety, risk management, all of those sorts of things. And so it's moving in this direction. So this just gives you an idea. 4 of them are carbon accounting. 8 of them are ESG reporting on SASB. Remember, I mentioned that one reporting framework.
Yeah.
4 on GRI. So there's a move toward this ESG reporting.
Yeah, interesting.
So one major barrier that we have to mitigate climate change is a labor shortage. And it occurred to me at Spring Camp, actually, when we were doing the renovator panel. We don't have enough trades to do the work we have right now. And Ian McVeigh had indicated at that time that we need to triple the number of renovations in order to hit our climate targets, so that we don't have catastrophic damage. And so that occurred to me that even if we had all the money and everybody was on board to do this, we still will not be able to hit our climate targets because we don't have enough people doing the work. So this is a really critical message that we need to relook at our apprenticeship ratios. We need to get more people in the industry and talk about this in a different way, and talk about how we need people to help in addressing climate change. So we're seeing a lot of pressure from the industry, and I'm assuming this is Formula E. So what can we do?
Right.
So the takeaway is do some research, get familiar with those sustainability reports, look at what information is on there, get familiar with the reporting frameworks and standards. It doesn't mean you have to do them yourself. There's people out there that can help with this, but get familiar with them, because there will come a time when an investor or a bank is going to ask you for this information. You want to start curating your data so that it's mineable, because it's very challenging to have to draw information from PDFs and Excel spreadsheets and different pieces of information. So start curating your data based on the information that you're going to need to report on. Ask for those EPDs, the environmental product declarations from manufacturers. Look for triple bottom line wins. And for any builder, I tell you, start in the warranty department, because that hits the environment, that hits the social. And because, like, what customer is happy when you have to come in and fix their home, right? And it helps with your bottom line. And then lastly, it's spread the word to try to get more people in the trades, because like I said, if we don't have people to do the work, then this is all a bit of a moot point. So that's kind of a lot of information that I wanted to cover, but it ties in with what Chris was talking about on the carbon side. So
Yeah, it sure does. No, thank you both. Maybe I'll have Chris come on there as well too, if he's still with us. Yeah, we had so we're going to open it up to some questions. We actually had a number of other people roll on as you were presenting there, Chris. So yeah, well, number one, I want to thank both of you for a couple things. One is you were good to tell us that there's a few things we're getting right. You were good to tell us what we can do, right? Because I think that's a challenge we face, is we know there's an issue, we understand there's a science behind it, but as to what we can do seems to be very complex. So you've laid out some things that we can do. And then of course, Chris, I think, both Stephanie and I referenced that quote. I forget the gentleman was, it's not just about stop making the mess, but to start to clean the mess up. It's like, wow. I hope we trained all of our children to clean up their bedroom, because maybe that's the first step, right? So let's have folks put some notes into the Q&A for us, ask some questions. Feel free to go as deep technically as you want, or as high level as you want. So we have some questions. So here I'll take, maybe we'll take Zoran. Zoran's got a question in here, or just, I guess this may be more of a statement. And again, you guys can back out, talk about this. He mentions that, a third of the greenhouse gases come from buildings we use right now. 70% will be standing in 2050. We can't address climate change just by building net zero homes. Solutions that make the homes we live in right now to net zero are also needed in order to preserve climate. So in other words, it's that, it's that big fish. It's that existing home, decarbonizing those existing homes, right? Chris, to that point, do you have any, again, just notional or anecdotal stats on the comparison between like buying an existing home and renovating it versus a new build on like an embodied carbon standpoint?
Yeah, roughly. We're just finishing up a project at RMI where we're looking at a few large retrofits, so deep energy retrofits on larger buildings, and I mean, that point is well taken. It's super important, and it actually, to me, it's one of the things that concerns me the most, because if we're not thinking about the material related emissions as we go about trying to renovate, tens of thousands, hundreds of thousands of buildings across North America, even millions if you include the States. If we do that with the highest emitting materials, which are quite often in the insulation market, the go-tos, what we saw in the RMI report was that the emissions that come from putting those materials on the building are going to negate the effects of making that building net zero emissions for anywhere from sort of like 3 to 10 years. And so if we're like, hey, we've got this target to make all buildings net zero by 2030. It's great if you can make the building net zero in its operations, but if you've canceled out all of those savings until beyond 2030, we haven't actually done anything at all. And so,
Okay.
to me, I'm very passionate about embodied carbon in new construction, but I think it's absolutely essential. Like, I don't think we should be giving out $1 to anybody, from the government to do a retrofit unless the material emissions are being, considered, because like we could literally be paying people to make the climate worse instead of better. And I think
Okay.
that's super important. And I'm glad that was the first thing that came up, because, to date, the work I've got is on new construction, but it's like this is, it's both the thing we need to do for operations, but it's the thing we could get completely wrong on the material side.
Chris, is there a way that we could, I actually feel like we need to do a deep dive on the impact. Like, we have this greener homes program, lots of good intentions, lots of, altruistic reasoning. But I wonder if maybe in February, March this next year, we shouldn't do a little bit of a deep dive on what happens if on the existing home site. And again, we don't want not to downplay what's trying to be done, but I've been involved with a lot of, like with you folks today, and we're working with new builders on new stuff. But that existing side, man, if we get it wrong there, wow, that's yeah. All right.
Especially because a lot of what we're doing there, a lot of the grants, they're not for deep energy retrofits. They're for like things that are going to improve efficiency, 10%, 20%, maybe 30%, but often with, interventions that have a pretty big embodied carbon price tag. And so, it's one thing if you're eliminating all of the building's emissions after the renovation, that's great. And that will kind of like balance itself out relatively quickly. But if you're doing kind of like half measures that are causing a lot of emissions on the material side and not really reducing the operating emissions by that much, that's where I have real concerns that it's sort of like the kind of like, well, I'm sort of doing a sort of job, but it's not really, it's not really fixing either problem. It's going to potentially, make the material side look even worse.
Yeah. And the scary part is that the programming and incentives are often focused on, at a high level, they're being done because of carbon emissions or because of COP targets, but it's being sold to the consumers as a energy savings reduction measure. And that's where it gets lost, right? It gets lost. So it's, all right. Stephanie, maybe you take on one of these here. Let's,
I was just going to say, on that point, it also gets lost though, even too, when you think of the GDS, some of the green development standards where they're focusing on energy efficiency too. And I think it's because, and so they need to broaden that conversation to look at the full picture, to Chris's point, instead of just looking at this one little segment, right? And so I think and at the code at national, we are talking and trying to see if we can broaden that conversation, because we do know better now. So, we need to do better. And I think that the guidance and the leadership needs to come from there too.
That's right. Corey asked a question. Maybe I'll throw this at you first, Stephanie, and then Chris, you can chime in if you want. Corey just says, do we know of any place where they're factoring in the carbon, if you will, associated with, say, density? So good land planning uses versus other measures. I don't know if there's
I don't personally know that, but so what it sounds to me like Corey is asking if at a municipal level, if they're looking at embodied and operational together on land. I think that's what the question is. I personally don't have an answer to that, but I don't know, Chris, maybe have you seen anything out your way?
Well, I know, I've started working with a couple of those larger American builders that you had up on your slides, and part of a proper ESG report, like a complete one, is they should be looking at and considering the emissions of, we just made a new development, like we cut down this many trees, we disturbed this much soil, all of those things have emissions with them. So I think from that side, when people are doing proper ESG reporting, it's not quite happening yet, but the intent is those things should be captured too. Like if I had to lay X number of kilometers of sewer pipe, and that's all made out of concrete. There's emissions there. I had to make roads like that. That should be factored into the neighborhood kind of scale. I just, there was a great thing on Tree Hugger today about, the sort of ongoing debate about density of, and sort of making the point that for a while now we've thought of density as really tall buildings in downtown cores, and we're starting to realize that from a carbon point of view, that's actually really bad density. That once you get a building above a certain height, the embodied carbon to make that building and the energy it takes to service that building, to pump water up to 60 stories, to run elevators up 60 stories, is actually like a magnitude of order worse than, buildings in the sort of like 4 to 8 story range. And so, it was an article about how did Paris and Madrid and Montreal, how do they have some of the best densities in the world without, relying on these giant towers?
Buildings. Yeah.
And so
we saw the same thing in Vienna the Ontario Homebuilders did a tour of Vienna, and it was actually very similar, densities, very dense.
They probably don't have 1,000 square feet per person.
That's right. That's right. Your expectations, isn't it? It is. It's easy. We know often what the answer is, but and again, I'm not going to say it's them, the consumer. It's us. Are we willing to live with that type of thing? And I think things might be changing. It is interesting though. So it does sort of bring back to the question, and I'll jump on to the next question here, but Corey makes an interesting point, because now does this bring this carbon conversation back to this push for brownfield development, right? Reinvigorating infill, not high, but mid wood frame type building and housing, compact housing types. So, okay, let's go to Jonathan Burr says, Chris, is there a direction for heat pump, choice of refrigerant? Do you know if there will be a bit of balance if the performance of the low impact refrigerants can't reach the same performance? So I think we're talking about the operational emissions versus the refrigerant, the carbon, the GWP of the refrigerant.
Yeah, I mean, I can't say that I have there's no blanket answer to that. I do know that when we explored, we did a passive house office building for a teachers union in Lindsay a few years ago. And when we looked at that building, we actually decided not to go with heat pump. We actually went with electric resistance heating, which if you had told me at any point previously in my career, you will install electric resistance heating in a building, I would have said, well, no, that's way too inefficient. But, to be honest, when you get the loads down low enough, the grid is clean enough, and you've got enough solar on your roof, it works, it's so, we may start, especially on the new building side, as we make buildings more efficient, getting to the point where, all the added complexity and cost and the refrigerant question of that type of heating, maybe we actually don't need to go there. I think in the meantime, there's probably a place for, heat pumps with great refrigerants that maybe, peter out at a slightly, warmer temperature than the ones with the really high refrigerants. And maybe that's a great use for electric resistance at that point. Like you make it up, with small amounts of electric resistance heating at those rare sort of super cold days.
Yeah.
But I can't say that there's a definitive answer, but I think there's a lot of push going on to sort of get better performance out of the better refrigerants. And the thing is, once you're forced to use the better refrigerants, then you're going to figure out how to make the performance of those better.
That's right.
There hasn't been a lot of push to really maximize that yet. So I think we'll see actually a huge amount of development in that space in the sort of upcoming decade.
It is interesting, Chris, you commented, going from heat pumps to electric baseboard and highly insulated, passively designed homes. We often find that's the same path too, but then we get into the cooling issue, and then we go back to a heat pump, and we sort of do this circular round and round, right? So then you get but then you're able to, like you said, the load is so small, you put in a mini split, which is just indicative of a 1.5 ton air source heat pump, right? That's really what it is, or a half ton with some electric backup. And that gives them, again, that little bit of cooling too, because again, we do have issues on the resilient side with the cooling. All right, Tex says, question for you. Tex, welcome. Good to have you, man. Tex McLeod says, Chris, is it time to revisit PWF foundations? Pressure treated, right? Wood. So we know the details needed to make them. They last 100 years. I know areas in the state of Michigan and Minnesota and Wisconsin where it's predominantly wood foundations. What do you think? What's your take?
My take is that's one potentially good solution. I think it's, it works well. It can work well in some places. I think as we see places that are going to be subjected to a lot more flooding, concerns about that sort of thing, if you're building in a place like that, maybe not pressure treated wood. I think, there's a lot of questions we need to answer about foundations in this country. Do we always need to have a basement is one, that's a third of the carbon footprint of every house we've ever looked at is in those basement walls and in that slab. And quite honestly, do we need space in the ground, or do we bring that up out of the ground? Do we bring it up out of the ground on piers so that flood water just runs right under the house and doesn't wreck it? Like, I think, there will be very specific climate and sort of, regionally driven solutions, of which pressure treated wood foundations may very well be one, in places where, the soils are well draining, you're not in or close to floodplains.
Yeah.
Great, but it's not going to be the solution that fixes everything everywhere either. But I think it's, one thing that builders should start really thinking about in their toolkit of in these scenarios where this is appropriate, this is a really, viable thing to be considering.
Chris, I'm going to have to pull out. I have a little thing my dad gave me from the mid 1970s from the University of Minnesota on pressure wood foundations. There we go. All right. One question I want to bring back up. It looks like it was answered, but Stephanie was due, and I think it's worth everyone hearing. It was that question about, do you expect ESG reporting requirements down the road for private companies? And they asked, John asked it 5-10 years, put a thumb in the air and go, what do you think?
And yeah, so that was my response. My gut feeling based on what I'm seeing is I could see private companies being asked for this information from investors in finance, maybe even insurance. So I do see that as being something that very well could be expected, although it's kind of your guess is as good as mine. Everything seems to take longer than we think. I don't know, Chris, what do you think? Do you have any thoughts on that?
Well, I think, the ESG reporting is what's driving all the interest in the work that I've been doing, especially in the US. And I think for private companies, I don't think governments are going to require it, but if your lender now has ESG requirements, if you're a bank that is publicly traded and has ESG requirements, you can't just go give money to people who don't. Like that becomes, something that you have to consider. So I think the pressure won't be in it being, a requirement. The pressure will come in it's going to be harder and harder to find money that doesn't ask you for that information.
Well, and actually, some of the lenders are saying that you could get preferential lending rates for doing it or non-preferential rates for not doing it. So there could be repercussions for not doing it, and also, taking action as well. So that's exactly what I've been coming across as well. It's the finance industry is driving the bus, really.
Yeah. And interesting in the sort of initial scoping stuff that we've done for some of the large builders, the scope 3, the embodied carbon stuff that you had pointed out there, that dwarfs their scope 1 and 2 by orders and orders of magnitude. Almost all of their impact, when you add it all up, is there in those building materials. And it turns out that their trucks and their fleets and their off in comparison. So I think I'm hoping that's what starts driving those builders to really address that and get those embodied carbon emissions down, because on those ESG reports, that's what shows up as oh, this is the thing you're responsible for. And
well, one thing I noticed Oh, sorry. Yeah, one thing I noticed was that a lot of them, the reason that they're not capturing some of the emissions is because the subtrades are not their staff. So those fleet are not their vehicles, right? So it's the subtrades would have to do their own carbon accounting to actually capture the full picture of the carbon emissions for the building of those homes for that builder, right? So it would be kind of a mix of scope 1, 2, and 3 there to actually get the full picture. So, but yeah,
To make an observation, we've seen 4 cases in the last 3 years where the development financing, the lending agency was asking of the developer and the partners proof of ESG efforts, because they were then going to include it as the lender in their filings and accounting. So it's and it was interesting. That was the thing that triggered the conversation with our team. So, okay, I got a couple more questions here, folks, and we're at 2:24. Really good conversation. Corey asked the question, Corey McBurney asked the question, you know, the value, Chris, in carbon offsetting programs. Maybe if you want to take a quick run at this, and then Stephanie, and then I want to get to one more question after that.
Sure. I would say the direction that that's headed is not so much offsetting projects. I think we'll see that terminology and those types of projects fade because they're very hard to verify, and we'll start seeing carbon removal certificates as being that place. Like, not, oh, I did this thing and so it may have had this effect. It's like, nope, X number of tons of carbon came out of the atmosphere and I paid them to do that, or, you know, I bought that credit from them. So whether that's farmers intentionally, you know, getting carbon into the soil on their farm, you know, could be building materials. There's 2 companies now that offer carbon credits to builders who put carbon storage materials in their buildings. I think we'll see that market grow. People making biochar, whatever it happens to be, even that the direct air capture people, like those are, you put your money in and it, like you can verify that the ton of carbon came out of the atmosphere, versus offsets, which are like, I planted a tree. If it grows and if nobody cuts it down and if there's no fire, it will, you know, change atmospheric carbon levels by that ton that I bought. But those are much vaguer. And so I think we'll see a move more towards these removal certificates.
Removal, that's a good term. Removal versus offsets. Stephanie, any thoughts?
Yeah, well, basically my thought is, I think those types of products are good, but if you as your business can actually reduce the emissions in your own operations, that's kind of like ideal. And if you can't quite get there, then the offsets or the other things, the removal certificates like Chris was talking about, could be advantageous because you're having to pay for that, right? So it just depends how your business is set up, and if it's cheaper to buy that to get the effect that you're looking for than to change your own operations. But I say if you can fix it at the root and reduce your emissions, then that's ideal.
Yeah, good. All right, we are down to like 3 minutes. So here's a rapid round answer from both of you. Alexandra asked a big question, and it's almost worth a whole couple-day webinar. She said, my municipality is creating green development standards, GDS. We're considering the right combination of low carbon efficiency and embodied carbon. Do you have any advice on a framework, overall emissions performance requirement, you know, without being super prescriptive, still allowing flexibility? And then she says, do you have any examples in other places? So what I'm going to ask is, as opposed to diving into details, and again, Alexandra, please reach out to Stephanie or Chris if you need to, is Chris, where would Alexandra go? What other municipalities might you point to, or examples of this, or sources that could help with this?
So Vancouver is about to be the first municipality in North America to actually implement an embodied carbon standard, and they're announcing an incentive program for that sometime in the next few weeks. That's going to be the precursor to it being an actual regulation. So they're going to spend a year or two incentivizing people to come in under a certain carbon cap, which is actually 200 kilograms per square meter of conditioned floor area. And so, they're gonna offer X thousands of dollars for certain, amounts underneath that. And that will be the first of its kind. And I expect to see a lot more of those sorts of things to follow, but that's going to actually be the first in North America.
Good. Stephanie.
Actually, I think that's a perfect answer, so I'll leave it at that.
Good. We
The
have
other
one
aren't quite
last.
there yet.
There you go. Gardner just mentioned more of a statement. We need numbers for finishes, for renovations, flooring, appliances, cabinets. Absolutely. To Chris's point about existing homes. I just to note though, the beam tool and the MCE tool both do look at flooring types, do they not?
Yeah, flooring. And so one of the things that I left out of my "what are we missing" thing, and I shouldn't have because it's big, is paint. Paint will be typically, when we look at I'm seeing EPDs for paint now, it'll be 10 to 15% of a building's total carbon footprint emissions up front, and we're not counting that right now. So that one I think is really important. We're hoping to add it to the tools in sort of next iterations because it is so important. It's just really high in carbon, like the carbon footprint in manufacturing it, and we cover a lot of square meters,
Every child that's born, they get a new paint color.
Whereas, cabinetry, it's like, even with a really high carbon material, like how much material is it? When I looked at countertops per square meter, they've got some high carbon footprint, but you're not using that many square meters. But paint, when it's like 3 kilograms of emissions per square meter and you're doing hundreds of square meters, that really starts to add up.
Good. Okay, folks, Chris and Stephanie, thank you so much today. We're going to wrap this thing up. It is 2:30, and I want to a special thanks for all of your good questions and everybody that joined us today. This is again at the top of, man, this is really good today. So folks, shameless plug, our Building Science Builders Digest. We have links to all these presentations, articles that comes out seasonally. It's about building science for low-rise residential, and it's building science, carbon, energy, sustainability, case studies, all those kinds of things. I do want to just note real quick that our next Provincial Advanced Building Science series is going to come up here on December the 1st, and we're going to take a deep dive with Trevor Trainer on historical home deep energy retrofits. So what in the world do you do when you can't destroy the or don't want to hurt that existing structure, that stone that was put together 200 years ago? How do you do it and yet lower both energy and carbon? So Chris and Stephanie, thank you so much. We're going to have to do this again in 2023, but someone on the chat, you might have seen it, just said, Chris, Stephanie, keep doing what you're doing. Hopefully you live long and prosper, because we need this work done. So
thank you for the invitation. It was really a pleasure to be here.
Yeah.
Thank you very much. All right, folks, have a good rest of your Thursday afternoon. Take care.
Thank you. Bye.